Hey guys, Breezy CPA here, your certified AI public accountant. Before we get into the video, make sure to hit the like button. Do it now. You know you're going to like the video. And if you want to see more videos like this in the future, please subscribe. If you're interested in learning more about accounting, taxes, or becoming a CPA, make sure to visit us at breezycpa.com to check out our library of courses. Breezy CPA offers hours of high-quality HD video with searchable scripts that allow you to easily follow along and navigate to your desired point within each lesson. Each course comes with a comprehensive study guide that you can both download and print for easy access on the go. The student dashboard tracks your progress and allows you to easily navigate to each lesson. With a test bank of over 5,000 questions, our patented quiz tracking software helps students identify mistakes and provides detailed solutions and explanations for quick improvements. For a limited time, use promo code BREEZY20 to get 20% off your order. Link in the description box below. Now on to our video. Alright guys, so what is additional income? Well, here we have a 1040 for Chris and Alice Jones, and they are a married couple living in Los Angeles, and they are married filing jointly, and they have 4 kids, Mark, Annie, Sam, and Phil. And here they are reporting their income for the year on their 1040. And we can see here that the total amount from their W-2s was $100,000. So let's say each of them made $50,000 for the year. But then we see down here on line 8 that we have another line for additional income from Schedule 1, and they're reporting $48,700. So we want to figure out what this additional income is and whether this figure is correct for Chris and Alice. So here we have the Schedule 1 for Chris and Alice Jones, and this is additional income and adjustments to income. So part 1 here is the additional income, and part 2 is the adjustments to income. So we're going to be taking a look at the additional income. So on line 1 of additional income, we have taxable refunds, credits, or offsets of state and local income taxes. And we can see here for Chris and Alice that the IRS guidance is that taxable state refunds depend on whether the taxpayers itemized deductions in the prior year, whether they itemized the deductions in the prior year and claimed state taxes as a deduction. So for Chris and Alice, $2,000 taxable refund from prior state tax refund because they itemized their deductions in the previous year and benefited from deducting those state income taxes. So this income would now be included here for Chris and Alice, $2,000 for their tax refund. Next, we have alimony received on line 2A, and let's take a look at Chris and Alice's situation. So alimony is taxable only if the divorce agreement was finalized before January 1st of 2019. For agreements that were finalized after that date, the alimony is not taxable. So let's see what happened for Chris and Alice. $10,000 in alimony was received from Alice's 2017 divorce agreement. So because the agreement was before 2019, the payments remain taxable for Alice. So Alice would need to include that $10,000 alimony payment here on her Schedule 1. Next, on line 3, we have business income or loss, and the guidance from the IRS on this is that the net business income from self-employment is reported here on this line based on your Schedule C. There is no specific IRS limit on reporting. Income is net of allowable business deductions. So this means that your income minus your deductions is what you're going to be reporting. Chris and Alice, $12,000 net income from Chris's freelance graphic design work. So let's take a look here at Chris's Schedule C and see what he did with his graphic design. So here we have Chris Jones graphic design, and we can see here his income for the year, $28,930, and we can see that he had expenses of $16,930, which gave him a total profit of $12,000, which gets reported on Schedule 1, Form 1040, line 3. So here we go, Schedule 1, 1040, line 3, and we are going to report Chris's $12,000 from his freelance work. Next, we have other gains or losses on line 4, and the guidance for these are that gains or losses from selling business property or other non-personal use property are reported here using form 4797. So what's Chris and Alice's situation? Well, they have a $1,500 gain from selling business equipment. Gains are taxable to the extent that they exceeded the adjusted basis of the asset. So let's take a look at form 4797. And we can see here a sale of business property for Chris Jones, and he sold a piece of equipment here for $1,500. So he reported a gain of $1,500 on this equipment, and we carry it down all the way to the bottom, and we can see here that it goes on Schedule 1, Form 1040, line 4. So we go back to Schedule 1, Form 1040, line 4, and we enter the $1,500 gain that Chris had for the sale of that equipment. So next on line 5, we have rental real estate royalties, partnerships, S corps, and trust. The guidance for this is that net rental income or loss is reported on Schedule E. The passive loss limit for rental properties is $25,000 a year, but this phases out at higher incomes. Chris and Alice's situation is that they had $5,000 in net rental income, and this was received from a rental property that earned $5,000 after deducting expenses such as mortgage interest, property taxes, and repairs. So let's take a look at Chris and Alice's Schedule E, and we can see here that this is the Schedule E for Chris and Alice, and they had income here of $6,000. They had expenses for their mortgage interest, their repairs, and their taxes of $1,000, and they ended up with an income on this rental property of $5,000, and this gets reported on Schedule 1, 1040, line 5. Going back to Chris and Alice's Schedule 1, their 1040, line 5, and here they would report that $5,000 of rental income. Next, we have line 6, and line 6 is farm income. So the guidance for this is that farm income is reported on Schedule F, and farm losses may be limited if they exceed the income of the taxpayer. So Chris and Alice, they had $1,000 in net income from Chris's hobby of side farming. So Chris earned farm income by selling produce. Since this activity is profitable, no hobby loss rules apply. So let's take a look at Chris's Schedule F. Here we have profit and loss from farming for Chris, and Chris is growing tomatoes. And Chris, here in Part 1 from farm income, Chris sold $1,500 worth of tomatoes, and he had expenses here in Part 2 of $500. He had chemicals, fertilizer, gasoline, seeds, and supplies for $500. So his net farm profit and loss is $1,000, which would go on line 6 here, Schedule F for farm, and that would be $1,000 that Chris would report for his tomato farming. Next, on line 7, we have unemployment compensation. So all unemployment benefits are taxable unless Congress phases out an exclusion. So Chris and Alice had $4,000 in unemployment benefits for Alice, and Alice's entire unemployment income is taxable in this situation. So the unemployment compensation on line 7 would be $4,000 for Alice. So next, let's take a look at other income on line 8. So here we have first on line A here, 8A, net operating losses. So the IRS guidance for net operating losses is that a prior year net operating loss can be carried forward and used to offset the current year income. No limits apply. In Chris and Alice's case, they have 0, so they did not have a prior net operating loss to carry forward this year. So we are just going to enter 0 for them. Next, on line 8B, we have gambling. So the IRS says that all gambling winnings are taxable regardless of the amount. The losses can be deducted on Schedule A, but only up to the amount of the winnings. So Chris and Alice, they had $2,000 from lottery winnings this year, and the full $2,000 is taxable. If they had gambling losses, they could offset the winnings up to that $2,000. They did not have any losses, they only won, so they would need to record $2,000 for their gambling winnings. Next, on line 8C, we have cancellation of debt. So this is any forgiven debt. This is generally taxable unless it's excluded. So that would be insolvent or bankrupt. If you go bankrupt or insolvent, then you don't need to pay the taxes. Chris and Alice's figure was $1,200 in forgiven credit card debt for the year. So the $1,200 is fully taxable because they did not qualify for any exclusion. So they couldn't afford to pay their credit card. They called the credit card company, and the credit card company said, "We will take off $1,200, but you need to pay taxes." Next, on line 8D, we have foreign earned income exclusion. So this is foreign earned income up to $125,000 can be excluded if the taxpayer qualifies for the foreign earned income exclusion. Chris and Alice lived in the US, so they had zero foreign income, so they would report zero foreign income on their Schedule 1. Next, we have income from Form 8853, which is distributions from long-term care contracts. Chris and Alice didn't have anything for this, so they would enter 0 for Form 8853. And then we have Form 8889, and this is for non-qualified health savings account withdrawals, and these are taxable. So for Chris and Alice, there was $500 from Chris's health savings account withdrawals for non-medical purposes. So the $500 is taxable because it wasn't used for a qualified medical expense in Chris's case. So on line 8F, Chris would need to record that $500. Next, we have line 8G, and this is the Alaska Permanent Fund dividend, and you need to live in Alaska to get this. These dividends are fully taxable, but Chris and Alice do not live in Alaska, so they do not qualify for this. So this would be 0 for Chris and Alice. Next, on line 8H, we have jury duty pay, and all jury duty pay is taxable. So you go in, you do your jury duty, you waste your time there, and then you have to pay taxes on what they give you. So $200 for Alice. Alice must report the full amount on her taxes. So on line 8H, we are going to report the $200 that Alice got for jury duty. Next, we have prizes and awards on line 8I, and the prizes and awards are taxable unless specifically excluded by law. So things like scholarships wouldn't be taxed. In Chris and Alice's case, they got $1,000 from a photography contest. So that full $1,000 would be taxable to Chris and Alice. So this would go on line 8I, $1,000 for their photography contest winnings. Next, we have activities not engaged in for-profit on line 8J, and the guidance for this is that income from activities considered hobbies are taxable. So if you're doing your hobbies and you make money, it's taxable. Chris and Alice, $500 from furniture sales. The $500 is fully taxable because it's considered hobby income. So on line 8J, Chris and Alice would report $500 for their furniture sale. Next, on line 8K, we have stock options, and non-qualified stock options, known as NSOs, are taxable when you exercise that stock option. So Alice and Chris, they had $3,000 from Alice's stock options. The $3,000 represents a taxable portion of the non-qualified stock option. So Chris and Alice would need to report on 8K $3,000. Next, we have income from rental or personal property on line 8L, and these are profits from renting personal property that are taxable if the rental is for profit but not part of a business. So for Chris and Alice, they had $1,000 from camera equipment rentals. So the $1,000 is taxable after expenses. So they would need to include this $1,000 on line 8L here. Next, on line 8R, we have scholarships and fellowship grants. So taxable amounts are scholarships not used for qualified tuition or educational expenses. So if you get a scholarship and you don't use that money for books or proper educational expenses, then it would be taxable. So in Chris and Alice's case, $2,000 in taxable scholarship income. The $2,000 wasn't used for tuition or qualified fees, so it is taxable in this instance. So on line 8R, Chris and Alice would report $2,000. Next, on line 8V, we have digital assets, and this relates to cryptocurrency payments for services. These are taxable as ordinary income. So Chris and Alice, $1,000 for freelance crypto income, and the $1,000 is fully taxable. So that would be included on line 8V, $1,000. And lastly, on line 8Z, we have other income, and this is other miscellaneous income that must be reported, and there's no limits here. So Chris and Alice had $800 from selling collectibles. The $800 is taxable because it exceeds the basis in the collectibles. So they would need to report that $800 on line 8Z. So now that we have all the entries for Chris and Alice's Schedule 1, let's take a look at the totals. From line 1 to line 7, we have a total of $35,500. For the other income section, we have a total of $13,200 for a total income for Chris and Alice of $48,700. Now this number gets transferred over to Form 1040, line 8. Let's go over to Form 1040, line 8, and we see $48,700 from their additional income on Schedule 1. This would get added along with the W-2 and other income that is listed right here at the top of the 1040. And Chris and Alice would need to pay income tax on that additional income. That is it for this lesson. I will see you guys in the next one. If you found this video helpful, please make sure to give it a thumbs up and subscribe for more content. If you're interested in learning more about accounting, taxes, or becoming a CPA, visit us at breezycpa.com for courses. Thanks for watching, and I'll see you guys in the next one.